What's going on, guys? This is Dave with LoFiTrader. We're going to go ahead and give you the market ahead, see what type of news is going to be giving us the catalyst for the volatility so we can take some trades. And of course, we're going to look at large cap and some of the small caps to see what's happening. So let's jump right into it, baby. Alright, so with the overall news, the first thing I like to bring up, guys, is the economic calendar. So I will go to investing.com and go to their economic calendar, and I'll scroll down here, and we can see for the next week, actually they've already updated it. So on the 18th, we'll have building permits coming out. The building permits, we can always click on it. I'm going to show you how to do it here so that way you can be independent on your own. And when you click on it right here, building permits measure the change in the number of the new building permits issued by the government. Building permits are a key indicator of the demand in housing market. So that is one catalyst that we have coming up. The implied volatility is usually higher on these, but really the highest one that we're going to see is on April 20th, the initial jobless claims. If you guys have been here for any of my live shows, you will know that the initial jobless claims are always going to be very important to keep an eye on. What are they? Well, the initial jobless claims measures the number of individuals who have filed for unemployment insurance for the first time during the past week. All right, this week is, this is the earliest U.S. economic data, but the market impact varies from week to week. And we know from watching this, we've seen plenty of wicks that have cleared tops and came right back down. And sometimes it can do a great job at continuations, but we just need to know where the volatility is going to be. So let's go over the overall market first, guys. After we go over the overall market, I will show you a few of the stocks that I have my eye on. So if you remember, I'm always talking about this 410 area. Why? Well, I've marked it from back here. We have price action at 410. It's a very key level. And now, not only are we trading over a 200-day moving average on your S&P 500, but it's starting to have a nice little curl here. And as you guys know, as an IBD investor or a stock, a William O'Neill stock, How to Make Money in Stocks, the book I like to read that I listen to habitually every night to learn more and more and more from him. We want to be over a 200-day moving average, and we want to see good price action. He's a cup and handle type of guy, and we are starting to see some of those across the board now. So there's a lot of setups. I wouldn't say there's a lot of setups, but there's a few setups. But right now it just seems like the SPY is what's holding the SPY up. So let's go ahead and take a look at it, guys, right here. This is the daily. We can see it looked like we were forming a head and shoulders here and that it was going to break lower, but it held this 10-day moving average, okay? And as you guys remember, I've been talking about since this pullback, creating a new higher low off of this. So we have 1, 2 new higher lows. I have a feeling that this thing could easily pull back to 400 before heading higher to retest this $400 area. But if the market wants to continue to prove its strength to us, then maybe it holds this 410 area. If it wants to hold this 410 area, that's going to be absolutely beautiful for the overall market. Next up, the IWM, still trading below a 200-day moving average. And I think if we look at our financial sector, we'll see that we have some underlying issues with this IWM because it does hold a lot of your financial sector. So I brought up the financial sector right here for you. And as if you guys remember, I was talking about when everybody was scared. Everybody was absolutely terrified about bank crashes. We had a huge pullback. This was that huge pullback. It wasn't even that big in your financial sector, okay? And then it found support right here, okay? Bounced 3 times now, okay? Everybody's freaking out on this candle, but nobody said much, during all this crap. But either way, we're getting a bounce, so it's looking a little bit more healthy for the financial sector. Not to say that this thing cannot crash back down on us, but the overall financial sector is looking decent at this low, trying to hold those lows. Now, the Dow Jones Industrial, on the other hand, is rip city to the north side, back up here at these highs. So on the daily, if I just mark this out right here, guys, you can see we have a ton of price action at this 34,276 level. You can see that every time it's came up into this area, it has rejected in at least the past, I would say almost a year now. Okay, so keep that in mind when we have the Dow Jones up here. We want to see it trade sideways before pushing higher. If it wants to just rip straight up into that, I have a good feeling we're going to see some pullback on that. So, QQQ. The market's strengthly of a sector. The QQQ is your 100 stocks, roughly 100 stocks of your heavy tech sector. And as you guys know, and as I will show you, we're going to run through that tech heavy sector and we're going to show you why it's looking so tasty. So if we look at the QQQ, we can see that we have this cup and handle. Now we usually don't play these off of ETFs, but it does look very, very pretty. It's holding this top right here, this 313 top. It came back, it tested. It's showing that it is a strong area because it's tested more than once on this daily. 1, 2, 3, 4, 5 different times now. And if it wants to head higher, I have a feeling this is where it's going to want to do it. Now, of course, if we still get more sideways action, we're still doing good. We're still showing new higher lows in this market. Excuse me, and it is, I really like it. I really like it. We're starting to curl on the 200-day moving average. All signs are showing that we could head towards a bullish market. But as you know, I'm a bear with bull horns. I like to see both sides of every subject. So when we're looking at this, we need to see that big blast on volume, that big push to help prove to us that this isn't just a lull, this isn't just where we're going to hang out. So we still need some proving to do, but definitely we want to keep in mind when these things break those highs. Next up is the dollar. So the dollar looks like it is dropping down. It broke new lows here at 175. And then it bounced back up. So we're seeing a lot of wicks. This looks very interesting for the dollar. Lots of wicks as it's failing. A lot of people don't really know how to ingest this information. Maybe they're keeping it from falling, right? Maybe there's people out there keeping it from falling, or maybe, you know, anybody that buys it up, people are selling into it. But these wicks are crazy. You don't see these wicks anywhere else on this chart. These wicks are very, very interesting. You can see there's a lot of action, a lot of indecision happening in the dollar right now. And this is what's really interesting. The VIX, the volatility index, is at a low. Okay? You don't see it this low for very often. So please be on your toes when it hits these lows. A lot of times we can get a spike in volatility. So keep that in mind with the VIX being low. Don't get caught off guard if this thing decides to scream to the north side. Now Netflix, I've seen a lot of people talk about Netflix, so we're going to talk about Netflix too. Now, as you guys know, this thing has just held these areas and pushed on volume higher. Now trading sideways at 338.63. I'd like to see this thing hold for a little bit longer before pushing higher, but the market's going to do what it wants to do. If this thing wants to push on higher and have a good time to the north side, then let it fly, baby. Next up is Microsoft. Now, Microsoft has been looking extremely strong. Still wishing I was holding on to those 200 shares, but shoulda, woulda, coulda. We made money on that. We're going to let it keep on doing its thing. Right up here is its resistance at 294.47. So is it going to be able to push through this resistance and carry on Wayward Son? Or are we going to get a bit of a pullback right when we hit this 294 area? Excuse me. All right, next up is Amazon. I used to call this the pooper scooper of a stock because it was under the $100 area. That $100 area seems to be tested now and is showing some strength at that 30-day moving average. So if it wants to head higher and get above a 200-day moving average so we can start looking at the overall market in a better way, a clearer picture with Amazon and some of your other stocks like Google being above their 200-day moving average, that would look great for the overall market. All right, next up is Meta. Good old Meta. This thing is like shooting straight up, is it not? Remember its bottoms down here, guys? That was just nuts. That was nuts. And now we're trading 158% higher off of those bottoms. Last year, in November, is when those bottoms came in. And you can see, look at that volume for that bottom. And then it got bought right back up by institutional investors. And then when the data came out that they were having way better than expected earnings, this thing chirped right back to the north side. So if Meta is not on your watch list, Meta needs to be on your watch list. Now things could get interesting right here at this liquidity gap where it failed last time at 241, but hey, we got a little ways to go before we get there, so let's keep an eye on Meta. Next up is NVDA. We're just kind of playing in this channel right now, and if you guys understand, I say this all the time, it's good to have this sideways action. That doesn't mean it's going to fail, but it definitely doesn't mean that it's going to keep heading higher, okay? Sideways action here is to get all your investors, whether you're up and you're trying to take profit, or if you're trying to find time to get into the stock, or. There could be so many different things going on here, but if we look at the technical data, we can see that we have a top here at 290, okay? Just like we're seeing tops in Microsoft and Meta, we're seeing tops that we're trying to reach up to. All right, so we're at 267.58 right now for NVDA. Now, can it get up to 290? That would be beautiful for the market. Can it head up on higher? It sure could, but in this area, after this big push, it's not going to be uncommon to have a pullback for other investors to get in. So Tesla, good old Uncle Tesla, still below a 200-day moving average. So this is one of those that still has proving to do. Now, if it holds these new higher lows, that's going to look really, really good for Tesla. But, of course, we need to keep in mind that these things can always fail. Below a 200-day moving average, they aren't necessarily one that you want to just start shoveling money into. Just because it's sitting low doesn't mean it can't go lower, guys. It has been lower, and this thing definitely could. Now, I hate to sound so bearish on it, but with the overall market the way it is, anything below a 200-day moving average, I'm not going to just dump a bunch of money into. I'm going to wait until it clears these areas, and as you can see, I have a mark at 207.81. When it breaks this 207.81, I will be looking to take a trade if it has already tested this area multiple times. So the first time it takes out that area probably won't be my time to get in. It'll have to test multiple times like you see here before breaking up, before I buy in. So this thing will create a new higher low. If it can continue, it'll head up and it'll test this 210 multiple times before creating a tight range and breaking off to the north side. So we'll see if that is what is going to happen with Tesla. Next up is Apple. Good old Apple. Right here at this resistance downtrend line. It's sitting at 165.21 right now, which is great. Absolutely great for Apple. I love to see it. But I don't necessarily trust this area so much. I don't think it's just going to keep on ripping to the north side. I think we're going to get some consolidation here, or maybe even a small pullback in order to see what Apple's true colors are going to be here. So I think even comfortably, it could pull back to 158, and we'd still be A-okay in this market with Apple. So we have a lot of room for pullbacks, a lot of room for retesting. But if it wants to keep holding new higher lows and heading higher, you won't hear me complain. So we have Google now just continually pushing above a 200-day moving average, above its yearly highs right now, which is absolutely beautiful. You'll love to see it in this market. And we were talking about Google back down here being a fanboy of this stock when it was in this area of support. Now, of course, I wish I could have, here woulda coulda, right? Taken just a dozen shares or more, you know, you could have capitalized on this thing. It could have been a beautiful thing, but it is what it is, guys. We have to live, we have to learn, and remember, you're a loser unless you're learning, okay? Now, an honorable mention is Riot. You guys know that I was playing Riot back here when we were talking about it breaking its range and what a beautiful trade it would be. We capitalized, we made some money on it. You can see here from 6.8 to 8, and then, of course, I wanted to get back in at 8, but we did not. And this thing is rip city biscuit to the north side. So if you're in Riot or Bitcoin, congratulations. All right, so just a few things that I want to go over, a few things that I want to look at on my watch list. This isn't. This is the pharmaceutical, which you guys know is pharmaceuticals, semiconductors, and software is what's hot. So if you're looking into anything that you want to try and find a good stock watch list or anything in that nature, those are your three hottest sectors right now, okay? You want to have your money where the money's moving. You don't want to put your money in a big boat, or maybe you do, but the way I invest is when I put my money into a stock, I want to see movement. I don't want to see stagnant sideways action. I want to see that thing ripping to the north side, or if I'm shorting, I want to see it fail right away, or I'm getting my money out and I'm going to put it somewhere where I think it's moving. Now we have ACCD. So ACCD, this is a pharmaceutical company, I do believe, but I do like this cup, I do like this handle, and I do like that it's pushed and broke above this $13 area. So I am going to probably take a trade on this as long as it starts squatting down on that 10-day moving average. It's still a little extended, about $1 for me. But I do like this. I like that the fact that it tested, and then it broke through, came back and retested this area. I was not in front of my phone or computer at the time when it retested. It took off too quick on me, but it's a-okay. I had 2 or 3 days to do it. I was a little squeamish about it. So still living, still learning, still loving the stock market. EXTR, now I do have capital in this. I did buy right at that 10-day moving average when it pulled back on this. On Friday, I bought it right around $19. Actually, let's just take a little peeky gander and see. We bought it at $19.15. So right here, just right above that 10-day moving average, and I'm just holding on. These aren't buy or sell recommendations for anybody else. I'm just letting you know what I'm doing for your entertainment. So next week, when you guys join me and we take a look at this, we can see exactly where we are at. Okay? Wednesday, WDAY. That's actually Workday, excuse me. Workday has roughly the same thing going on here. We got a cup and handle. We had a big push out and a pullback, which is never good when you see these big pushes give back all their gains. But it's nice to see it is holding. So if it wants to continue to hold, this might be another nice mover. Just above a 200-day moving average, and it is curling up to the north side. Duolingo is also a big mover. After this big gap up on earnings, it's held and then continued to push higher. So this isn't one that I can get in right now just because it's still too extended. It's not following the 10-day moving average anymore, so I would be out. So I'm going to wait for this one for another setup. But HEAR, if you guys were here last week when I was talking about this, we talked about AEHR, 1, 2, 3, 4, 5, 6, somewhere around this area. And I talked about if it holds this 10-day moving average, goodness gracious, hold on to your longs, because I see a bunch of institutional ownership being bought up down here in these areas. And so when you see big volume coming in like this, and it comes up and it tests this triple top and it breaks through, that's a good sign that we might have continuation for the stock. And also, we have this huge liquidity gap from this 1062 to this 1276. So do keep that in mind that when it gets back up to this 1280 area, we're probably going to see some resistance there. But for as good as it looks down here, that resistance might be my area to try and find a way into the stock. So just something I'm keeping an eye on. LNTH, if you guys were here during earnings, I actually marked everything out, this hourly gap up. So if you wanted to play this, you could. I just marked it out and I said, I like playing these earnings plays. I either play the 1 minute, 5 minute, or the hourly range break. This was actually the hourly range break right here. We marked it out in green at 71.43, and then your stop out would be down here at 67.34. So pretty wide range on this, and that was my biggest issue with taking this trade, is I said the range is too wide. Now, even though I had a wide range, I still could have managed my risk properly and taken a sizable amount of shares so I could still capitalize on this trade. But it is what it is, guys. This is just one of those things that, I missed the trade, and now we're going to keep an eye on it so we can learn, because you're a loser unless you're learning, and so I want to learn from these trades. So we'll go over a couple of more, and then we're going to call it quits for the day, guys. So pay attention. Make sure you hit that like, hit that subscribe button so you can be here anytime I go live, which is usually on Fridays, and then I try to do a stock market update for you on Sundays. So make sure you hit that subscribe button, hit that like button. It helps me out tremendously, guys. So ASUR, this is another one that I marked out on the gap up on earnings. Absolutely beautiful. Absolutely wish I would have played this pullback, this retest. So definitely learning a little something from these earnings gap ups. Earnings gap ups are working. We need to make sure that we are risking properly. We're using proper risk management to be able to take these trades. So now that I have them marked, now that they are working, and I know this for a fact, I will definitely be keeping an eye on the earnings that are coming up. So if you guys want to learn how to do the earnings and you're using Thinkorswim, you can just go to Market Watch, and then you can click on for the week of this month, which would be the 16th right here. Then we'll just go like this, click this. We're going to export to file. We're going to save that. Then we can go down to this earnings list and we can just add it by going into import, and then we're going to select the file that we just saved, and click OK. Now if we go to the charts, let me just click OK here, and we'll go to the charts, and now you guys know how to add it all yourselves. Now all the earnings list for this week are going to be right here on your stock ticker list. Now there's a lot of banks earnings coming out, so there's going to be a lot of eyes on those bank earnings that are coming out. And the thing is, guys, with those bank earnings, that might really take a toll on the IWM, okay? Maybe not so much the broader term markets. That might not hold them back, or it might not push them up nearly as high, but just keep in mind with the bank stocks and all that coming up. So what I do, guys, is when I put these on an earnings list, I just use the markup gap up scanner, the mark percent change, and I rank it from the highest to lowest. So that way when the earnings does come out, when they do come out, I'm looking at the highest gapped up earnings. I want to see anything over 10%, and that is where I can extrapolate some of that money. So we're going to keep an eye on those. Just a couple more honorable mentions in my stock watch list. As you guys remember, SMCI, this did come back. It retested this green area and took off higher, looking very good on that. And ONON, it's still holding this area. It's starting to get a little choppy. I think there's a lot of eyes on this, but I definitely think your eyes need to be on it too. Okay, if it wants to hold this 21-day moving average or even this 30 before pushing higher, that would be absolutely beautiful for the stock. So guys, thank you so much for joining me. Make sure you hit that like, hit that subscribe. I'm going to be here every Friday and every Sunday. So I want to see you here.